got plenty of economic news this week, and who better to join us than Derek Holt in studio, Head of Capital Markets Economics at Scotia. Great to see you.
My pleasure.
So the consensus seems to be among traders that the Bank of Canada will go for another big 50 basis point cut tomorrow. You, I think that's the most likely course of action for Tiff Macklem, but you're not convinced that it is the right one?
It's the easy thing for him to do. It's priced. He can put on his Santa Claus suit in the press conference and wish everybody happy holidays and come back on January 29th after inauguration and start from scratch. And so I think he can also emphasize the risk management approach, that it could be more difficult to arrest a 2% undershooting of inflation than an overshooting, so he may as well take out some insurance in that sense. And he's a dove, in my opinion. So three factors line up in favor of an aggressive cut here. But Andy, I mean, traditionally the bank only used to cut 50 or more in times of crisis, like the dot-com period, like the GFC. Back-to-back 50 in a time when there's no crisis right now. I mean, where is the crisis here? That would be unprecedented. And so I think he needs to be a little bit more circumspect and measured. I'd love to see him deliver less than what markets have priced here. I think that would be the more prudent thing to do.
So we've had inflation in interest rate policy as well as everything else.
Yes, it's. I think on the inflation front, we forget that we are off of one inflation report, the latest one, that showed that the Bank of Canada's preferred core measures were all relatively hot. They averaged about 3.8% month over month at a seasonally adjusted annualized rate. That's pretty hot. That's well above their 2% target. It's been volatile, but we've seen some hotter numbers in prior months too. So we're not out of the woods just yet in order to be really rapidly easing. We also had a decent trend in terms of jobs. I know Friday's jobs number, 50,000, was mostly public sector, but public sector is down over recent months. Private sector has been driving this. It's still a pretty tight job market overall, in my opinion. And so I think he's got to be a little bit more careful here in terms of the speed of adjustment, especially as governments around this country are throwing out money left, right, and center going on into the new year.
The finance minister is going to provide us with an economic update or fiscal update on Monday, and the thinking is that she blew past her deficit promise for the fiscal year that ended in April. She'd said she'd keep the deficit below 40.1 billion, 40.1, yes, but we've heard talk of 46 billion.
And she's going to keep blowing past it, in my opinion, with handouts and GST cuts, HST cuts starting in just next week, as well as the checks that go out next April. The only uncertainty here is how big they will be in order to give it to more people. And so billions of dollars going out at the same time that Ontario is sending out billions of dollars in January through rebate checks. The BC government is giving $1,000 per person by next spring, probably. It's tied up right now, but I think it'll go through going forward. You've got billions and billions and billions of dollars being handed out by federal and provincial governments in the first and second quarters, and we're easing mortgage finance rules starting at the end of next week. The bank needs to be careful about joining this party.
You mentioned the provinces. We are actually going to be interviewing Vic Fedeli, Ontario's economic development minister, this afternoon. What kind of an economic management job has Ontario done, do you think?
Well, I think right now the key thing is to keep their options open as we go forward. We don't know what kind of environment we will be facing for a province that is heavily reliant upon the industrial base and the manufacturing base, and that's particularly the tradable goods and tariff-exposed sectors of the economy. We don't want to give away random checks, in my opinion, at this point in time, as opposed to keeping some powder dry for more sustainable sources of support if we need that.
We just heard, of course, that the actual auto manufacturing in Canada, which is essentially Ontario, is headed for, or a prediction, is headed for its lowest in decades.
Yeah, and there are a lot of problems tied up in that. I know the southern states are complaining that Mexico is siphoning off business from them, but they did it to the northern states and Canada for years with billions in subsidies to attract plants away from this part of the world. And so we're dealing with a lot of structural problems, a lot of distorted trade policies that have been long in the making here.
Speaking of trade, Mr. Trump's tariffs, he's a master of bluster. We hear he's a master of...
Understatement.
Yes, that's right. We hear he's a ninja when it comes to negotiation. But you think that it's unlikely... Well, there's reasons not to be too worried about across-the-board tariffs.
Not yet. I think it's still possible that we can pull out the stops and avoid at least that magnitude of tariffs. There might be some relatively symbolic ones, but we have to be prepared for it. And if we do get them imposed, then it's going to be, depending upon how big they are, how long they last, and how broadly they are applied, if he really does do what he says, it's a very dovish scenario for the Bank of Canada. And I think you want to wait in order to evaluate that risk at this point in time, rather than to make a speculative bet. Because let's say those tariffs don't go through and you've just given away all this monetary easing because you thought it would. Let's say Canada retaliates and you're running the risk of imported inflation and going forward. That would complicate things for the Bank of Canada, and you just delivered all this monetary easing on top of it all. You got to be very, very careful in terms of the balance of risks into 2025.
I mean, presumably a lot of damage would be done if he put a tariff on autos, because the two countries have such an integrated system.
Autos, energy, I don't believe that there won't be carve-outs here. If so, then you're probably looking at the biggest single-month spike in U.S. CPI inflation on record once the February numbers come through.
I see a former Canadian trade negotiator was quoted as saying, government officials in Canada are thinking about possibly putting an export tax on energy as a retaliatory measure, but it seems a bit far-fetched.
I hope it doesn't get to those lengths. That's almost cutting your nose off to spite your own face in terms of the impact upon Canada. You magnify the negative impacts of external tariffs when you retaliate in kind, in full. But it may well be that, when you're dealing with somebody who's going to be antagonistic in the playground over the next 4 years, you've got to punch them back in the a little bit at some point.
But previous retaliation tariffs from Canada have included measures aimed at the areas of specific politicians. So that was creative. Maybe that will be the approach this time.
That's very true. Kentucky bourbon and the like. But the magnitude of the U.S. tariffs was a lot smaller and narrower back then than it is right now. And so I'm worried that Canada retaliates to a much bigger degree this time around.
What about that Canadian dollar hitting a new 4.5-year low today? Obviously, that's inflationary in Canada because we bring in so much stuff.
Yeah, and I'm not convinced it's stopped its depreciation going forward. I think it could go on to the 145 range, especially if we do see external tariffs imposed upon Canada. And so that's going to raise the cost for a lot of imported goods into Canada and discourage a lot of outbound travel by Canadians as well. But is the Canadian dollar doing what the Canadian dollar should? It's a shock absorber. And so it would be a whole lot worse if it didn't adjust that way.
We're covering a lot of ground here. There's a lot of gloom in Canada right now, particularly this productivity problem, per capita productivity dropping relentlessly. We've heard it's connected with immigration, excessive immigration numbers, excessive temporary residents. But is there more to it than that?
Yes. The part of it that I'm worried about is the productivity side of the picture. That's been long in the making, decades in the making. Our businesses underinvest. They're slow at adopting new technology. They spend too little on R&D. We don't achieve the same economies of scale and scope in our businesses in Canada. This is not a new problem. We've been talking about it throughout my 30-year career, and we still haven't fixed it. The part of the problem I think is grossly exaggerated is when we convert things to per capita numbers without adjusting for the population. You can't take all the temps. I don't know how your student life was, but I remember my student life. I wasn't spending a whole lot and contributing a whole lot to the economy beyond textbooks, tuition, beer money.
Right.
And so international students coming to Canada, as well as temporary foreign workers, I think have to be removed from those per capita calculations. They'll pay a dividend in future years.
Yeah.
But I think there's a distorted, politicized debate going on here.
Derek, thank you very much indeed.
My pleasure. Thank
Derek
you.
Holt,